Morgan Stanley just dropped a Tesla bombshell. They say investors may need to add new tabs to their Excel models. They explain, we believe the humanoid's opportunity is far bigger and faster adopting than autonomous cars and will see a greater quantum of capital behind it. And Tesla, of course, is at the epicenter of the theme, and that's why they think investors may need to add new tabs to their Excel models. They think the initial cost of the Tesla Optimus bot is going to be between $50,000 to $60,000, but they do see a way for Tesla to get down to $20,000. They release a 10-page note, so there's a lot of stuff in here. They predict that the humanoid robot addressable market is $30 trillion. In the US, they forecast a humanoid population of 8 million units by 2040 and 63 million units by 2050, which they believe would be a $3 trillion wage impact. I think these numbers have to be way too conservative because think about it. If you have 8 million useful humanoid robots already, wouldn't some of them already be able to make more humanoid robots, making scaling very fast? So an increase of less than 10x in 10 years, that sounds way too low. But it's Morgan Stanley we're talking about here, which believed back in 2019 that Tesla's stock could go down to 66 cents per share when split adjusted. So yeah, they were wrong about this one by a factor of more than 200. So they are likely to repeat themselves here as well, but they are starting to take this into consideration very seriously. And this could be a pivoting moment for Tesla. Before, these big institutions didn't even take the Tesla Optimus bot seriously, but now some of them are starting to actually think about it and say, oh, this is a bigger deal than FSD. And I think it would be fairly reasonable to think that currently it would cost Tesla more to make one humanoid robot than to make a Model S, a luxurious vehicle, but Morgan Stanley thinks it only costs maybe about $50,000 for Tesla to make one humanoid robot right now. That's if we exclude software. I know that Morgan Stanley does build robo-taxis into their valuation models, but now they say we believe that the humanoid time to commercialization will materialize faster than autonomous vehicles given the variability of the autonomous vehicle operating environment, which would be the real world, and corresponding safety implications, human passengers, pedestrians versus the humanoid form factor, which can learn in a geofenced domain, like a warehouse, for example. Even though humanoids have more physical outputs, the difficult operating domain, safety concerns, and regulatory scrutiny that autonomous vehicles face pushes their adoption curve out to the right in our view. If Morgan Stanley continues this kind of rhetoric, I would expect them to increase their Tesla stock price target later on, and often when that happens, Tesla stock rallies 5% or more in a single day. They think robotics is having a ChatGPT moment right now. Well, you're literally putting ChatGPTs into robots, so duh. Elon responded to this, Tesla robo-taxis will be a $5 to $7 trillion situation, but he responded with maybe higher, which would be more than a 10x from here alone, and then you add Tesla bot on top of that. Elon Musk, by the way, said that he expects to see over 1 billion humanoid robots in operation by the 2040s. So that was a great note from Morgan Stanley, and it's great to see that institutions are waking up to Tesla's potential. We will only see a lot more of this. Sawyer did a poll. What do you think will be a bigger opportunity for Tesla? And 28% of the people almost thinks it's the self-driving robot-taxis. But to me, it's pretty clear that if Elon Musk stays at Tesla, in the decades to come, the humanoid robots will have a bigger market than the self-driving vehicles. And we know that Elon Musk is really fixated on colonizing Mars, and having humanoid robots is critical to that mission. To transport one human being from Earth to Mars, you need quite a bit of space. You need like a whole room. But to transport one humanoid bot, you can just put that bot in a box, a small box relatively speaking, and you can ship 10, 20 maybe in the same space and use these bots to set up a city on Mars. So knowing that, I don't think that Elon Musk is just playing games with the humanoid robot. I think he's actually really serious about it. So to me, this humanoid thing is more a matter of when will it happen, not will it happen. In the short term though, I see more potential in full self-driving because I can get in my vehicle and I can see that it already sort of works, whereas with humanoid robots, I don't have first-hand experience yet. The Model 3 performance in the US has only been recently released, and we are seeing some inventory discounts now. You can get up to $2,280 off if you buy one from the inventory, but it has to be a demo vehicle, so it's not really a real discount. You can see all of these are demo vehicles. So just recently there was this massive hack in the auto industry where car dealers couldn't really sell any more cars, but because Tesla knows its software, it was not affected. But over 15,000 auto dealers still cannot access the CDK software that runs everything from new car sales, finance, repairs to payroll, and it may not be back up until July. So the whole industry was stopped with one hack. We got some Model 3 performance production data. Tesla began producing the Model 3 Highland performance in high volume at the Fremont factory on May 29th. Initially, the Model 3 performance wasn't included in the Highland upgrade in Q1. So yeah, production is definitely happening right now. We just got Tesla's production numbers from China in May. The number was at 67,000. The CEO of XPeng has now published his full review of FSD. He even goes as far as to say that FSD drives better than someone new to California like him. FSD beats him on smooth driving and handling. He's probably feeling a bit uncomfortable about Tesla coming to China unless he's thinking about licensing Tesla's technology. Here are some good FSD news. There were no ADAS operators driving Chuck's turn, and often when that happens, that means employees are going to be having an initial wave of the new FSD version released internally, which Elon earlier said could be this weekend. Another strong indicator that it is going to be released to the public soon is AI Driver. He's flying far away from his car, and if history is any indication, this means that FSD v12.4.2 should be releasing very soon. I'd like to thank him for doing this for us. I don't, however, expect this version to be really that polished yet, but v12.4.3, I expect that version to be quite a bit more polished, and then we can really compare this version to the previous v12.3 version. There's another Tesla software update being released, but this one is just a bug fix release. There were a few really interesting remarks here. Martin Viecha has been in charge of Tesla's investment relations up until now, but now he says, just took a delivery of a Model 3 performance. It's absurdly fast, so much better than my previous Model 3 with so many changes, big and small. Most importantly, I would go as far as saying it's too affordable for what it is, a premium sedan that's Porsche fast. And now watch this part. The delivery experience is second to none. Received a message saying, your car is ready at this location. I take an Uber to the delivery center, locate my car, unlock the car with my phone, and drive away. No papers to sign, no staff to meet, that's it. However, there is one thing that seems to happen with Model 3 performance deliveries at first. I was kind of disappointed in the acceleration, but then I looked at the settings and then he had to change it. Maybe it was on chill mode. Either way, he changed it to insane mode, and now, of course, it's really fast. And the same thing even happened to Martin, so watch out. I think the best way to describe this is disappointingly shocking. Mercedes on Tesla Supercharger says this, and I'll explain what I mean. We are currently assessing how Tesla's latest announcements may affect our plans. We assume that Tesla will fulfill its contractual obligations, and we continue to aim for Mercedes customers to have access to Tesla Superchargers later this year. So the layoffs happened how long ago now? And Mercedes is only now looking at this and evaluating the situation. This has to be some of the best proof to show that Legacy Auto is really slow to respond. Multiple Tesla owners are reporting this bug, so let's get Tesla's attention and let's get this fixed. When you have multiple cars in the Tesla app, right after going into the app, the first swipe you do to swap car won't work. You'll be taken back to the original car. You have to swipe again to get to the other car. It shouldn't really be too difficult for Tesla to fix this, so Tesla employees, please, let's get this fixed. For the people that are really annoyed with this, there's a workaround. Nick says, I have a widget stack with the cars in it. If you open the app from the widget, it goes directly to that car. Not a fix, but less annoying. Oh no. Someone says, I've literally opened my front and trunk on one of my 3 cars in my app. Ruins my day depending where I'm at. Wow, SpaceX is now reportedly valued at $210 billion, up from $180 billion in December 2023. Mercedes is investing more than previously planned on combustion engine technology, including $15 billion this year on its passenger cars. No wonder people are not buying their EVs. They are not really investing in that business, are they? Meet Kevin interviewed Cathie Wood, and he shared a few things that she said.
She also thinks that Dojo, I can't wait to show the interview, but Dojo is actually way bigger than we think it is. And that Elon downplays Dojo because he wanted to get his NVIDIA chips. He didn't want to poo-poo NVIDIA. Now he's got his NVIDIA chips, sending them to his other businesses. He's got what he needs, pushes out FSD 12. Now he can go all in on Dojo again. That was a smart observation. I don't know, I want to hear what everybody else thinks about that. But personally, I don't know. I'm getting a little excited about Tesla over the next few days, and maybe I'm just making a mistake here. You know, maybe I shouldn't be buying this thing when it's already up a bit today. But yeah, I think once we clean that order book out right at $200, you're going to 220. That, again, could be wrong, but the reason I believe that is at 200 you're probably going to have some sell orders. Although I think most people who have already sold or Tesla, or already out of Tesla, or wanted to sell Tesla, already out of Tesla, this is why we keep kind of like slowly climbing up here. I think there could be some selling pressure at the $200 level in the order book for Tesla, but I think after the sell pressure at 200 is gone, you know, 201, 199, whatever, wherever people put their sell orders in, once those get cleared out.
I presented this theory earlier that that's possibly why Elon Musk is downplaying Dojo, and that's certainly possible. Is it very, very likely? I wouldn't put it in the very, very likely category, but certainly possible. And speaking of Cathie Wood, she just annihilated Ross Gerber. Take a look at this one.
The judge in Delaware thinks, and that's why it got
Really?
invalidated.
Oh my goodness.
So what's happened now is it's going back to the judge in Delaware, and just because we revoted for it again doesn't necessarily make it valid either. So that was the problem, is that we're still dealing with this.
You know what's been great about this whole time? Andrew Ross Sorkin on CNBC, and we used to be on the other side of Tesla regularly. He is with us on this. I think this is un-American. I really do.
What's un-American?
To let judges use some esoteric fairness. What's unfair about a stock moving from, I don't even know what on the split basis, $20 to $417? You know, what's unfair
Cathie,
about
once
that?
again, you're not talking about why this happened. This happened because Elon's brother is on the board of directors,
and he was
voted
back then,
on,
and you knew
right.
it.
Oof, that hurt. Dan Ives was also just on TV. Here's in 60 seconds what he said.
Where do you think Tesla's headed?
300. I mean, 275 to 300 is where we see that, and I think Tesla's going into their next stage of growth. I mean, I think you start now to turn the corner in China. They've made some tough headcount cuts. Profitability will ultimately ramp as growth returns. And August 8th, Robo-taxi day, I mean, that will be a historic day for Tesla. And betting against the Tesla story, look, all the bears thought, this was going to be the year that this thing fell apart. They've hit struggles, no doubt. But I believe we're now starting to turn the corner, and that's sort of our thesis.
Yeah, and look, the lower cost models is really what everybody's waiting on. More and more news on that. August 8th is like the day, it better be good type of thing. If it isn't, could be problematic, I guess.
I'm really looking forward to the unveil of the Robo-taxi on August 8th, and there's a good chance it will look something like this. This is a competitor, of course, but the design is likely to be somewhat similar. Of course, we know it's going to be a cyber cab, so it will have some resemblance to the Cybertruck, probably. ARK Invest just discussed their $2,600 price target for 2029 in this new video, so let's take a look.
How many Optimus robots you have?
That's integrated into the model and it's replacing labor in Tesla, but doesn't have a material impact relative to autonomous over this time frame. And I would direct people to our big ideas. So we do think Optimus is going to be a huge opportunity, 24 plus trillion in annual revenue, and that's roughly split between at home and manufacturing. You could see it potentially in services as well. The real question here is the timeline for capability and generalizability. And so it is certainly a timeline question, whereas I think in the Investor Day presentation as well, Elon said it, but it's like if you get to the end state where it is as capable as a human, it's very easy to see how it can be a multi-trillion-dollar application.
Yeah, and we had a lot of internal debate over kind of how to tune the Optimus assumptions in the model, but you can see that we do expect, so we haven't assumed that they sell it externally. So you as the user, that's something that you could change as one of your inputs. Okay, well, if they sell it externally, kind of what would that look like? What would the revenue and margin profile on that look like? And then, you can look at sort of the volumes in the model as well, tune your own assumptions. But ultimately, relative to autonomy, but even just in the context of EVs, it has some impact on manufacturing costs in the 5-year time frame. But it's just, doesn't have a big financial impact from our perspective over that time period. Of course, past that time period could certainly change.
When I model Tesla stock in my valuation model, I look at Tesla bot, and I think in the long term, there's going to be tremendous value created from the Tesla bot as long as Elon Musk stays at Tesla. But in the meantime, I can jump in my vehicle, turn FSD on, and I can already feel tangible benefits from FSD. Not so much with Optimus bot. And so in the next few years, I'm not really attaching any significant value to Tesla bot when it comes to valuing Tesla stock. But that is going to change eventually.
Yeah, well, I'd actually like to address one thing. So, Tesla's been focusing a lot on users signing their car up for the network. And I think that is important, and they want to incentivize people to do that, because I think the way that they will launch is they already have a fleet of cars with drivers behind the wheel that they're using for validation. They'll likely add to that fleet. They can take Model 3s coming off of lease to seed the network in specific cities, basically get enough cars on the road so that you're not waiting forever to get a vehicle. On top of that, they want to incentivize Tesla owners to potentially sign their vehicles up. And you can imagine that this is, okay, they don't have enough cars in one particular city to launch it well, and they want to add some more. I don't think that long term that is going to be the majority of robo-taxis, these personally owned vehicles that are signed up for the network. I think it'll be important in the early years. I think long term, it's going to be other companies that house and maintain the cars, and they likely won't be on Tesla's balance sheet. So I do think that is one important distinction, because I think often people think of it and they think, oh, well, that's like kind of complex, and you have to sign your car up. Who's going to want to do that? I mean, we think that there will be economic benefit to doing so. Elon said that you could pay off your car with it. Basically, the way that you can imagine this working, we have a blog on this, is that when you're not using your car, which is, by the way, most of the time, people use their car less than 5% of the day. The rest of the time, it's just sitting there, and it's something that you already paid for or are leasing. So the other 95% of the day, imagine that, you tell the network when you're not using your vehicle, it drives out of your driveway or, your work parking lot, and picks people up. Tesla has said that customers that do this will get a hefty portion of the per mile fee. It's, we'll see exactly how the economics shake out. But the business model is charging people per mile for this ride. So if you drive 5% of the time, but the car gets over a 50% utilization rate, just theoretically, imagine like 45% of the day, it's collecting revenue for you, and it otherwise would have just been sitting there. It does seem like a great benefit for people that are willing to do that. And again, it becomes like a recurring revenue stream on something that was previously just a stranded asset. But again, that might not long-term be like the majority of what we see. Driving your personal car today in the US, it's cost you something like 70 cents to $1 to do so. But if the car has a higher utilization rate, and by the way, that's the average personal car. So actually Tesla's going to be even lower than that because they're an electric vehicle. We know from Sam's work, they have a better operating cost per mile. So you up the utilization rate in the car, it's going over more miles. You're now spreading some fixed costs out over that mileage. Imagine the cost per mile to drive goes, 25 cents or below is roughly around there. But, you're able to charge maybe Uber-like prices at first, or even if you're undercutting Uber. So Uber is $2 to $3. I've seen closer to $3 per mile lately. But imagine you're charging $1. You're making up the rest of that. $1 minus say 20 cents per mile. So if the car travels, Elon has said something like 5 times the utilization rate of a personal car, that would be like 70,000 miles per year versus like under 15,000 miles per year to you as the user normally. You're taking that mileage, you're multiplying by the delta. So yeah, it could be a meaningful income stream for people that are able to do it.
I think both options are going to probably be popular. There will be companies with fleets, and there will be many individuals who own Teslas who will let their vehicle be used as a Robo-taxi. I think the main issue for me personally is when I get back to my car, I want my car to be relatively clean. And if you cannot only provide the service to the people with the highest ratings, then you will not always find your car clean and nice when you get back into it. You will need to clean it probably. But I did hear Elon say before that you will be able to just let's say certain people use it, maybe someone in your family only, or in your friend group, or only let the car be used as a Robo-taxi by users that have 5-star ratings only. Now, you may make less money doing that, but still you make money. So I think there will be fleets that will service pretty much everyone, and there will be individuals that will likely serve people with high ratings to avoid headaches. And that's it for today's video. Make sure to like and subscribe, and thank you so much to my Patreon supporters. By joining Patreon, you will have access to all of my exclusive videos on Patreon, as well as how much I am willing to pay for each Tesla share between 2024 and 2033. If you join the investor tier, you will also have access to my valuation model, where you will see all of my assumptions, including deliveries, the energy business, Tesla's future businesses like FSD, and of course much more. And then if you want to easily download that and put in your own numbers, then this third tier is for you. To all of my Patreon supporters, thank you so much. Make sure to like the video and subscribe if you haven't yet as well. It's really important to like the videos because that makes it less likely that the channel will be shadow banned later, like my other big channel got shadow banned before from about 50% of my regular viewers. Thank you so much for watching, and I will see you in the next video.